Yo, what's going on, team? This is Arts Trading, and I'm going to be giving you guys a recap of the $3,000 account to $30,000 account challenge. This has been a little bit of a pause in the challenge. I took a few days of break because the market was a little choppy. I want to say it was a little too volatile, and I didn't want to necessarily take a ton of risk when it came to the smaller account because I know that if I take a big loss on that account, it's definitely going to set me back. So I stuck to main account trades during this period. So you can see actually when you go and look at our tracker, we went from the 21st from our last trade. That was actually on that live stream session that I had posted on the 21st, where we took an Apple short, which ended up paying us like absolutely crazy. So today was actually the 26th was actually the day of my first trade after that. And I actually took a small, about $150 win between two different trades. And I just wanted to recap exactly what I've been doing recently because I know I've been slacking a little bit on YouTube. And I apologize. I told myself I'd be uploading a lot more. I'm back on it. I apologize, but let's get these updates going. So firstly, the 26th, I took two trades. This is Apple and SPY. I took a small win on SPY. I took a pretty decently sized win on Apple. Let's really quickly go back into our chart. Let's go to the 26th of this month. So that was these candles that we're seeing right now. Pretty much I took both of these positions on the upside. That was based off of the 9-day moving average where I took these long. So Apple was on 9-day moving average. I took the position long. I took calls. And I wrote it up very slightly until it started showing signs of reversal on the MACD. You can see that through the histogram as shown, the light green lines are, say, a very big push towards buying, and the dark green are more so a sell-off of buying. So maybe there's a lot less buyers. Yes, there's buyers, but not as much as there were earlier. Obviously, the red is going to be a very strong sell. And then once you start getting into dark red, it's like the sell-off is starting to kind of ease out a little bit. So when it came to this trade, I saw that MACD started to cross over a little bit. I entered on the 9-day moving average. I actually should have sold around that 163 the first time around because the premium was actually a little better about this trade. But the position ended up kind of pushing a little bit towards, and the main reason why I wanted to sell so early for this position was actually because of this huge hanging candle. So when you see something like this, typically it's the sellers don't really have control, but you also have the doji style candle where you see the top is also very long. So in reality, this hourly candle is more so of an indecision. People don't really know, do I want to buy, do I want to sell? And that's why I was a little hesitant to continue holding my position. And I'm glad that I was because this thing dumped off. We went from 164 straight down to 158. So this was a massive sell-off, and I actually should have capitalized more so on the short side, especially when this MACD started to taper off and you started seeing this buying pressure, start to disappear. As for the SPY trade on the 26th, I took long again on that 9-day moving average, but it kind of started reversing quite a bit. And so notice that this thing immediately starts tapering out. I actually entered on this 1-hour candle towards the end of the day, or rather towards the end of the candle. And so this thing immediately started selling off against me. And so I just cut it as soon as it started getting near my buy-in. So I broke even on this trade. I think I took in like $11 or $12. $16. But it was kind of a sketchy trade. I didn't like that one. Let me see really quick. I also took a SPY short. This was actually a swing trade that I took yesterday. This trade ended up smacking me right upside the face. I took a call swing, and I assumed, we're going to bump today. Going into today. So I took this mainly because I saw that the MACD started to flatten out, not necessarily cross downwards. And so notice when you have the histogram, this thing kind of sat out a little flat, and also because I believed that the Apple would have very good earnings. So I was betting on Apple being the recovery catalyst for SPY. So I entered at about 430. I wanted to take profit at like say 434, and then some, but this thing opened up pretty damn red, and I took maybe a 20% loss on this trade. It was $180, and it was absolutely rough. I didn't want to take any more trades for that day because I didn't want to kind of force trades and try to play that I need to make that money back. And that typically is an issue that a lot of brand new traders have, is that need to make that money back that you lost. Honestly, the most important thing in the mentality of trading is being able to let that go. Yes, it hurts. Yes, it sucks. But the better you are at being able to let that go and go into your next trade with a clear mind is absolutely important to your trading success. So cutting that position and then just setting out for the day was definitely a good decision. And then going into today, we took 2 more trades. So that is shown right here. Apple and Facebook, both of these trades were pretty nice. I only took a $10 win on Facebook, which was kind of sucky. And then I took a $150 win on Apple. So when we go actually into today, let me pull Apple here. Apple set up super beautifully after their earnings. They opened up at about 163 after it sold off in pre-market. And basically what I noticed was we held support on 50 SMA, and then on 20 SMA, I entered at about, I want to say the break of 9 SMA, and then we rode it until 200. We sold there. Obviously it ran a little bit more, but I stuck to my plan, and that's what matters. As of right now, actually, I think this thing might run going into Monday. I might even take a position for this trade going into now. That said, though, I also took a Facebook trade, and this one was kind of a little bit iffy, mainly because I entered right here on this little candle. So notice we're sitting on 20 SMA, and this thing had a giant hanging wick. So at this point, I think I was down like 20%. I'm over here like, damn, I just lost $200, and I took the majority of my profit away from how I did today. But it ended up pulling right back up as Apple started to do the exact same thing. The market overall has been a little choppy today, so it's been kind of a hit or miss whether you want to enter positions or not. So I've been very sidelined going into this week. I've been taking very small risk, but making sure that I can catch full moves. That said, though, I took Facebook at like 296. I want to say very low 296. And what I ended up doing was taking this position from, sorry, I had a phone call that I needed to hang up for a second. And so I took it on 20 SMA, assuming we'd get to 50. So we bounced off a 9 SMA, touched the 50, and I exited. Main issue that I had with this trade was actually that it took a lot of theta. I'm not sure why. And so my position didn't make any money at all. I took $10 profit, which was kind of kind of bad. But overall, I was pretty pleased with both of my trades being green today, putting our account at a whopping 34.89. So overall, not bad. In terms of the challenge stats, I've taken 13 trades, of which 10 have been profitable. 3 have been losses. My only problem that I'm having so far with my challenge is that my average losses are 108 versus my wins being 80. I need to flip this. I need these to be completely different. Notice my largest trade win is 200 versus my loss is 180. So when it comes to something like this, when it comes to trading in general, you need to make sure that your wins are way bigger than your losses. And the main issue that I've been having with this trading challenge is that whenever I take, say, a bigger name or a more expensive contract, say, SPY being at $1,000 a contract or Costco being at $1,000 a contract, is that 10% is $100, which is definitely a big issue when it comes to actually taking the trade, because if I take a $100 loss, that's obviously going to make my average a lot bigger versus when I take, say, a SPY win, I'm taking in $80, $100, but I have more trade wins, and that kind of messes up my average. My main goal with this challenge is to definitely make sure that my wins are definitely bigger than my losses, because what's worse than spending all week long taking in $1,000, $1,000, $1,000, and then the Thursday you take a $5,000 loss, and then Friday, you make $1,000, you're down $1,000 on the week, and you completely wasted your time. At the end of the day, I want to completely avoid doing something like that, because at the end of the day, I like to pay myself. I want to make sure that I'm doing the most possible trades or the most efficient trades possible without taking enough risk to put me into a deficit or back at break even for the week. Because remember, this is going to be something that you are going to take to heart going into the future, just throughout your own trading career. You want to make sure that you are absolutely positively making sure that you get your bag. So if you're not taking profit, you need to sit down, look at your trades, what you're doing, and check, why am I not taking profit at XYZ level? Why did I hold this position until it went to a loss? Why did I let the loss get so big, etc.? Those are definitely questions that you need to be asking yourself. As for the actual video itself, I'm going to be wrapping it up here. I appreciate you guys all, as usual, for following with this challenge. If you haven't subscribed, feel free to subscribe. I also have a link in the description for the masterclass. I appreciate the people who just recently joined. You know who you are. I'm looking forward to mentoring you and teaching you exactly how I trade and how I use my indicator set to find positions that will be high probability. Obviously not financial advice, but It is something that I like to show because it is definitely a little more transparent than what you see on YouTube, where you're able to actually see, you know, my indicator set, how to use it exactly, and what it takes to choose a position that will win. That said, I'm going to wrap up this video here, and I appreciate you guys all for watching. Peace.